Hello everyone and welcome back to another video. During this video I'll be discussing another candlestick pattern that you can use to get better entries for your strategies, and this candlestick pattern is called the hammer candlestick pattern, and the name comes from how this candle looks when closes onto your charts. So to have a candlestick that hammer candlestick pattern, you need to have two things. You need this long wick, as you can see here, meaning that there at some point in price there was a huge bear candle on the downside right here, while least we are actually in an uptrend. So you can see price moving upwards like this. You can see the moving average, the long-term moving average, which is the white line, is beneath the short-term 50 moving average, which it means that we are looking for buy orders only. And let's say it meets your criteria for your strategy, because uh, candlestick patterns are usually used as confirmation, and I don't like to use candlestick patterns to be placing my entries on their own. I only use candlestick patterns to get as an extra confirmation for my strategy to place my entry. So in this example, I didn't actually take this trade because I wasn't on my charts, but I would have placed my entry around the close of this huge uh, candle right here. So if I were to delete this circle, the two things that you need is having this long wick, meaning that at some point price reached this point right here and rejected aggressively on the other side and closed above the where it actually started. So the body needs to be on the side that you want to be placing the trade. So the two things that you need is a long wick and an aggressive push on the upside. In this case, if you're looking for a bear example, which I'm going to be showing you, you'll need to have this to be a bear candle, and then the candle also closing as a bullish candle. So these are the two things that you need to be looking at, and you can see that it kind of looks like a hammer. So kind of like this, it looks like a hammer, and this is where it gets its name from, and you'll have gotten a great entry out of this. So let's have a look at another example to help you better understand how this works. Another example would be this one. It has a smaller wick, but it's still a valid um, pattern for you to use a hammer pattern. So you can see price was moving downwards again, retracing to the moving average, the 200 moving average, and we are looking for buy orders again. And after we see this momentum going downwards, you could have placed your entry either on this close of the hammer. You can see price retraced onto this level right here, and actually it tried to break through this level before, but failed. You can see two weak candles, which can be a great indication for you to feel that there might be a reversal in place. And after seeing this hammer pattern, you could have gotten in at this point right here. If you wanted to be a bit more conservative, you could have waited for another candle to be formed on your side. So place your entry around this level right here instead, if you want to be more safe. You can see long wick rejection and closed above the where it started. So we have a valid hammer to hammer pattern in place, but I wouldn't be trading this specific one due to the high momentum that it had on the downside. So I will probably be waiting for another green candle to form to actually place my trade. So this is another example of a bear hammer. Another example that is not a valid hammer would be, let's say, this one. You can see it has the wick as we had discussed, but it closed beneath where it started, which is not something that we want. So this is not a valid hammer to be trading off of, even though you can see that eventually price did go upwards and push aggressively on the upside. And again, right here, the candle did have a long wick, but failed to be on the upside, so it was red still. So it's not a valid hammer. It's still there is you can see that there is still momentum on the upside because there are two long wick candles, which can be a great indication that price might be going upwards. In this case, it's not a valid hammer though. Just to give you a quick example of how a bearish version of this hammer pattern looks like, we have here a downtrend. As you can see, we're looking for short positions only. Let's say this area right here meets the criteria for your strategy and you're looking for short positions. You need only a confirmation left for you to place your entry, and then you see this. So uh, price moves pretty aggressively on the upside and retraces back to the moving average right here, and it gets a huge rejection off of this moving average, and this zone right here you can see. uh, then it reacted off of it and pushed downwards and eventually closed or beneath where it started from. So you can think of this as this candle and this wick right here was at some point a full bullish candle, but sellers stepped in and sold the market hard and forced the candle to close at red. So pushed the price downwards, closed the candle at red, meaning that we might be into a downtrend and reversing onto the other side. So this will be a great indication for you to place a short trade right here if it meets your criteria. And it's very important to note that this is not a strategy to follow just by looking at the chart patterns and candlestick patterns to place entries. This is only for confirmation for you to get that extra confidence in your strategy and in your entry. So everything in your strategy needs to be in place, and then look for these patterns. So I wouldn't be trading this solely because there was this pattern right here. I would only be trading this if all of my confluences for my strategy were met, and then looking for the confirmation, and then I will be happily looking to get into this trade because of the hammer. So this will be an extra confirmation for me to say, okay, this is a good entry. I'm going to sell the market right here. So just to summarize what we're looking for a hammer, we need to have a long wick, let's say right here, and a close towards direction that you want to be placing your trade. So for example, you're looking for short positions and you see this long wick after seeing price moved upwards and then aggressively pushed downward by the sellers. And in the bullish example, you want to first look at this wick right here, uh, of of sellers pushing price downwards and eventually buyers stepping in and pushing price upwards, and this will be a great opportunity for you to buy the market, as this is a great indication for you to place your buy order. So this is all that you need to have a hammer pattern, and a hammer pattern usually justifies or suggests that the trend might be going towards the direction of where the candle is closing. And you can have a look at your charts and find examples of this pattern and test it yourself and see how much it works in your own strategy. So I'll suggest you have a look at the charts yourself and test it on your strategy and see if it fits you. So this is all I wanted to cover for this video. I hope you enjoyed this video, and if you have any questions or any recommendations for a video, please comment them below. Please like and subscribe onto the channel, as it really helps us out. And thank you for watching the video, and have a good rest of your day. Goodbye.